Good evening, and welcome to, I believe this is our 7th Presidential Economic Summit series. In the past, we've had such great speakers as Ken Langone, Richard Grasso, Kevin Pataki, Jack Welch, Susie Welch, Maria Monteromo. I welcome you, trustees, alum, visitors, and most importantly, students. President Grasso will be coming up in a couple of seconds to make the introductions on a more professional level. I would just like to thank the members of the panel who I've known personally for a period of probably 80 years. And having worked with some of them, worked for some of them, and endearingly longtime friend Richard Grasso, trustee, Dick Fuld, my friend, former boss, Joe Grano, my almost boss, and Ron Insana, who we've spoken over the years. This gives us a tremendous opportunity to gain knowledge of men that probably have close to 120 years experience on Wall Street, if not more. So without further ado, and thank you very, very much, Dick, Joe, Dick, and Ron. I'll turn it over to Richard Grasso. Thank you very much for allowing me to be part of this every year. President Grasso.
Thank you, Don. Don is just an inspiration to us in terms of our business program. He's really, along with faculty in the business program, just revitalized it. So we're so excited. And thank all of our guests. I just want to say that this is the 6th, I think, not the 7th of these. We've had such tremendous speakers, and we're well on our way into engaging these larger questions about the vexing issues that face us globally and domestically around economic growth and achievement, and the political stalemate that surrounds some of this as well. I'll just introduce our speakers just as they're sitting here. So inappropriately, I'll start with the moderator. And Ron Insana, as some of you know, is a contributor to CNBC and MSNBC, where he discusses the most pressing economic and market issues of the day. He delivers the Market Scoreboard report to radio stations around the country. He's written for Money Magazine and USA Today. In addition to his work as a business journalist, Ron was the CEO of Insana Capital Partners from 2006 to 2008, which at its peak managed $125 million. He's been a wonderful journalist throughout these years, particularly the troubled years we had since 2008, in terms of being able to translate difficult economic issues for a general audience as well as for an audience of experts. So we thank you, Ron, for being here. It's a privilege. Joe Grano currently serves as chairman and CEO of both Route 9B Technologies Inc. and Centurion Holdings. Route 9B was recently ranked number 216 of the top 500 cybersecurity companies in the world. Listing Joe was instrumental in bringing about the merger of Kane Webber and UBS in 2000. After 16 years at Merrill Lynch, Joe became the director of the national sales, and in 1987 was named the best retail marketing executive by Investment Dealers Digest. I think, in addition to his great work at UBS, there's a piece of his biography which is most impressive to me. Joe was a U.S. Special Forces Green Beret in Vietnam. For that alone, he's such a pro. Dick Fuld is the Chief Executive Officer of Matrix Advisors, a value-driven management investment firm located in the greater New York area. Matrix Advisors, a cohesive team of investment professionals, has been planted with opportunistic and responsive ideals since birth in 1986. Richard graduated at the University of Colorado in Boulder in 1969, received his MBA from NYU, Stern School of Business in 1973. While at school at Colorado, he participated in the Naval Reserve Officer Training Corps and became an Air Force pilot. In 1965, Richard first started at Lehman Brothers Holdings as a commercial trader, who is best known as the Chief Executive Officer of Lehman Brothers. It is indeed a pleasure to have Dick here with us tonight. And our own Dick Grasso, who is now the founder of Gladiator Holdings, of course, legendary chairman and CEO of the New York Stock Exchange from 1995 to 2003, chairman of the Economic Club of New York, the New York City Police Foundation. I'm going to give you just a slight list of resume to the New York City Police Foundation, the Advisory Board of the Yale School of Management, the International Capital Markets Advisory Committee of the Federal Reserve Bank of New York, who's on the board of New York University, trustee of the Economic Club of New York, and he also is vice chairman of the Congressional Medal of Honor Foundation, and of course, the trustee of Wagner College. We're so proud that he's largely responsible for this evening. We can't thank him enough for his leadership. So I present you the and he's from Jackson High School. What more? Thank you so much. Good evening. Ron.
Thank you very much. And thank you for joining us this evening. I should point out when Dick first approached me about joining the panel, he made it clear that I was not his first choice. He was hoping to get Jim Cramer, but tonight's Jim's medication holiday, so I'm but there are more where that came from. Let's start off pretty broad. I mean, we're looking at the U.S. economy. We're not sure if we're going to solve cash. We're not sure if that's going to be something that persists for a while. We're not sure what the Federal Reserve is going to do with interest rates. We see a world that's weak economically, even if the U.S. is relatively strong. How do you square the whole thing?
Well, I think these are very interesting times. The word I use is oxymoronic. We are in a place in the United States, particularly the equity markets, where the land of the blind and one-eyed is king. So that's the U.S. equity market. It's a safe haven across the globe right now. At the same time, if you're looking at earnings releases, you see that corporate America is hitting their earnings targets, but they're not hitting their revenue targets. So that's not sustainable. So the reason for the earnings targets getting hit is because zero cost of money. That's never happened before for this duration. So it's a subsidized economy for a period. I'm worried about a little bit of a head fake. The United States is in a better position than the rest of the world on balance. But without question, Europe is sliding into a slowdown, disinflation, in my opinion. You have Brazil and Russia entering into a recession, and you have geopolitical risk, the likes of which we haven't seen in a long time, from Ukraine to ISIS and the like. So I think that there's the possibility of a trigger that could cause a bit of a domino. Hope it doesn't happen. But I am not as, let's say, robust relative to the economy as others. I think it's a little bit of a head fake against a subsidized economy, and I don't think it's sustainable.
Big Fuld Jr.
The stock market was near an all-time high. You look at the debt markets, all-time low. And if you read the reports, we're actually in excellent shape. No inflation, except for consumer goods, which is what people buy. Unemployment down to plus or minus 6. At this time, it's about 5.5. And that's okay too, except you take so many people out of the workforce. So 50 million American women no longer in the workforce. 12 million African Americans no longer in the workforce. And so many people have given up their quest for a job or taken part-time jobs. So instead of 5.5, I think we'll go up to 10. You look at the banks are in terrific shape, balance sheets are stronger, except they're not lending. As Joe said, earnings are up. I think it's all about low cost of capital, but it's really because, in my view, they just cut expenses time and time again. And if you think about the consumer is basically 70% of who we are as far as GDP. I don't know how much room we have. So, given all that wonderful stuff, why doesn't it feel like that?
Big Grasso. So, are you as pessimistic as your two counterparts?
Actually, I'm not.
That's your version of optimism? Okay.
Well, I don't think Joe and Dick are pessimists. I think, having grown up in the financial community, you grow up as an optimist, and you are. However, I think the extended period of artificially low interest rates has created a whole new platform of economic challenge to this country, both the policymakers that we send to the halls of Congress and to those at the Fed and Treasury, I don't frankly think they know how to get out of the problem they've created since 2008. You know, to look at GDP growing at somewhere around the 2 to 2.5% level, you would say this is the most anemic recovery in the history of this country. And you would be right. However, with cost of money being as low as it is, and capital expenditures being as few as they are, you know, as Joe Grano said, you know, there is no top line or appreciable top line growth in corporate America, which is why you see public companies shrinking their equity capitalizations. You know, we've created, or the Fed has created, coming out of the implosion of 2007, 2008, we've created an environment where those who have had financial assets, risk assets, and particularly in the stock market, have done extraordinarily well. To Dick's point about 70% of our economy being consumer-driven, the consumer is still in a period of what I'll call a nuclear winter. They're bringing their balance sheet, their debt down. They're uncertain about their jobs. They're uncertain about the companies they work for. And so there's been a natural contraction. And frankly, you know, how this Fed winds its way out of a $4 trillion balance sheet, which is extraordinary in the history of the Federal Reserve, is going to be a very big challenge for Janet Yellen. Having said all that, you would think I'm a pessimist. I'm not. China's still growing at 7%. People worry about that. This audience would kill to see the United States grow at half that number. If you look at the European challenge, you know, and you take Germany out of it, they've got lots of problems. But the German economy is going to carry that, if you will, entire team over the goal line. The real wild cards here are the BRICS, okay? And particularly, I would say Russia. You know, no one knows what this guy is.
You mean as a geopolitical or economic sense of both?
Both sides. Because, you know, at any given moment, you know, you've got the threat of his annexing all his neighbors, and a world that's not prepared, or at least thus far has been unprepared to stand up to him. And you could decide willy-nilly, they're just going to default on all of the paper that's out there for the projects that we've created with other countries. Having said all of that, this is the place people want to be. And this economy is going to be just fine. The Fed is going to take longer at raising rates, true. And ask yourself the question, are those rates going back to a long treasury at 15.75, as it once was in the early 1980s? Absolutely not. Well, you'll see long rates probably around 4.5. How many in this audience would love to have had their first mortgage at 4 or 4.5%?
My first car loan was 20.
That's right.
1981.
You know, Ron, this country is still that shining line, and it's going to carry everyone over the goal line. I'm not worried about America. I think it's going to take a little longer. I think it's going to take political leadership that's willing to cross lines. And we'll get into that. So thus far, we haven't seen it.
I want to add one thing about Russia. The Cold War has begun again, but it's manifesting itself through cybersecurity. Russia is a state-sponsored backer of hacking of the United States and primarily corporate America.
And Fortune 500 companies see that on the Chinese
And ask yourself the question, JP Morgan Chase, Home Depot, Target, Sony, what do they have in common? Despite spending hundreds of millions of dollars, they've had terrible intrusions into their enterprise. It's primarily coming from Russia. That's the new Cold War that I'm very concerned. I also believe, to this point, there's a 50% chance he's going to try to conclude the balance of the Ukraine.
I'm going to come back to this in a second. I think, Fuld, I just want to ask you a follow-up on the aggressive comments about the Federal Reserve. So there are some people who argue that the Fed did what it had to do at the moment at which it was required to act. And had it not acted, one could argue that interest rates would be even lower today if the economy hadn't been, if the liabilities of the private sector hadn't been absorbed by the Federal Reserve and the public sector more broadly speaking. Do you agree with that? And so the rates are actually kind of where they should be relative to the crisis we went through, or is the Fed still behind the curve in normalizing policy?
Well, Dick is right. The Federal Reserve's balance sheet is today about $4 trillion. That's up from $750 billion back in just before September. This whole thing about QE and buying mortgage bonds, unfortunately, takes so much out of the place where it really should be. I mean, but it's not just the Fed. To me, we are just pushing the can down the road. I am the eternal optimist. I wish I shared this man's overall optimism. Having said that, we are the smart guy in the dumb class. We are the safe haven. A ton of money is coming out of Asia, coming out of South America, clearly Europe, although Europe is a little stronger than we. But we look at Europe, the ECB's balance sheet is also up from 70 billion, probably only to 3 trillion. So where's the additional firepower? To me, it's all about, I understand low interest rates, which are really driving a lot of growth. To me, it's all about jobs. Because if you really think about 70%, how are we going to move that to a higher level? We talk about inflation, deflation, or disinflation. There are different gradations, right? The only way you get there is to create demand. So it's not just Fed driven. The truth of the matter is they have to increase rates. They have to. Can they? No. Because if they do, we will truly fall, I believe, into recession. But, so how do you get there? And it's easy to talk about this. For me, clearly, it is about taxes, because we have to start to create jobs. That's only about infrastructure. And we can't continue, for us, we think it's fine. Next number of years is fine. It really is about our kids, and that's not fine.
I think you got to concern yourself with liquidity, particularly in the bond market.
Explain what you mean, though. This is a highly complicated issue.
I'm looking at the two exits. And every crash that we've ever had, whether it's 2008 or it's 87, is when people have to get cash quickly, and they sell quality assets because it's a hard tensor, and everybody rushes for those exits. And I think all of this quantitative easing going on around the world, the negative interest rates around the world, and the purchase of mortgage-backed securities and the like, are going to create, you can't print the money enough of the money, it's going to be a liquidity crisis from that concern.
Describe what that means to the average person. I mean, we know what it means in financial terms, but when you say that, so what, you're not going to be able to sell the bonds you own, you're not going to be able to
issue that at the same levels, and sovereigns across the world, which are a big buyer of our debt, stop buying and have to purchase the wrong security. I tell you that China will lead a new basket of currencies that will include the renminbi, that will include the pound, that will include the United States, which today is not the case. Today they all buy U.S. denominated securities. That, I think, will change over time, and I do think it's going to have an impact on us and on our national debt, which was $8 trillion when Obama became president the first time. Add $3 million for the war, that's 11. But our national debt today is now $18 trillion. And that's what's all happening in front of us, and that's the legacy issue that you're concerned about relative to our children, and I'm all for it.
So the outcome, though, would be dollar crash, interest rate spike, recession.
And I would differ with Dick on one point. I think that the Fed should consider at least a 25 basis point jump in interest rates before the end of the year and get the market moving towards a more normalized approach rather than a complete subsidization. They're running out of, there's no more power. Unless we want to go to negative interest rates, which I don't think we want to do as a nation. We're not Switzerland. But
I think they actually moved to 25.
so do I. I think probably September to December, not in December. I think they will. I think that's the smart move. But it's not going to get us back to where we were. But we have to send a message that we have to go back to normalization.
So Dave, what we say is the stock market's within a hair's breadth of an all-time high. The market has changed dramatically over the last few years. I'll get into market structure in a few minutes and some of the things that have been going on. This gentleman who was arrested in London, for instance, for his role, presumably in the flash crash, things that relate to the fracturing of the marketplace since you were running the big board. But with respect to the stock market right now, Warren Buffett said if interest rates, said this morning on CNBC, interest rates were normal, this would be the only value market. Lee Cooperman, who's a famous hedge fund manager, said markets are okay, fairly valued, opportunities are out there. Where do you sit with respect to
Well, if you listen to Warren's comments this morning, they were interesting because he said the market would be considered extraordinarily cheap if interest rates stay where they are for the next 10 years. Well, that's about as likely as Elvis walking in the door and joining us on the stage. It is, I think, a period of a new economy. And it's a new economy created out of a couple of things that have happened. The implosion in the housing market, the implosion in the stock market, the recovery of the stock market, the redefining of the map, the geographic, the geography of both Europe and Asia, and the powerful effect of technology on redefining, just about every form of commerce that we see. I'm not worried about the stock market crashing. I'd be more worried, and Warren said this today as well, about the bond market. I think people will lose more money in the bond market over the next 5 years than they've ever lost in the stock market if rates, in fact, escalate the levels of a new norm. I don't think they're going back to the norms we knew 20 years ago. But if you took the long bond to 5 or 6 and the 10-year to 4, that's going to have massive dislocation on the current portfolios. And sadly, Ron, I'm talking about quality paper now. Look at the high yield market, where it is now the spread between high yield, junk bonds, ladies and gentlemen, and quality issuers is about a historic low right now. Well, that won't stay that way if rates begin to move. And where does a lot of that paper sit? In IRAs, POs, retirement plans of state and local pension funds. And that's going to be a massive dislocation. Now, having said that, I think the Fed understands that. The Treasury understands it. And to Joe and Dick's point, what you really need are some what I would call cross-the-aisle initiatives, where you can stimulate job creation, whether it's through infrastructure investment, whether it's through an intelligent rewrite of the tax code. Look, we're not going to get anything that suggests one side or the other has done something great for the citizens of this country. But we could force initiatives that both sides can declare victory. Whether it's investment tax credits, whether it's tax credits for education. Last week there was some ideas floated about means test for Social Security. The Democrats love it, the conservatives hate it. Well, what if the means test included a tax credit for those who no longer are recipients who are going to give up that benefit? Okay? Hard to argue against that. Look around. Look at this great institution. How does a cop or a fireman send his kid to this school if they're not receiving some sort of financial aid? Borrow, if the kid borrows, it's a bad equation for the country. How about tax deductibility of college tuition? And how about programs that either side of the aisle can stand up and say, I supported that?
Well, Joe, let me ask you, either side of the aisle. This is an either-or environment. There is no crossing over. It's right. The only thing the President and Congress agree right now is trade promotion authority through a Trans-Pacific trade deal. And even there, the president has to push his own party to get support for that. We're not in an environment between now and November 2016 where it's likely that anybody's going to agree on anything, right?
Look, I couldn't be more disappointed with the U.S. Congress or this administration than I am. It's not just an issue of ideology on each side. It's lack of pragmatism in terms of what this nation needs. And they're not talking about things, education, job growth, this and whole. It's absolutely true. Think of a three-legged stool, and 70% of our GDP does come from consumption. But one leg is the home, and the American dream was always manifested in the home. I bought the home every 7-3 years. I sold it, traded up every 7-3, and then when the kids were gone out of the nest, I sold it, there's my retirement. Well, that's down 30%. Employment, he's absolutely right, it's closer to 10%, the unemployment rate. It's not the 5.5 that they're telling us. People are off the roads. And then the national debt, the debt that we deal with. By the way, I am concerned by very high levels of margin debt coming back. It's right now 490 billion.
Those borrow money used to buy
Buy
stocks.
stocks. They're too high right now. But the point is the consumer's not going to sit on the stool if those three legs are not strong. So we need a government that understands that, both Democrat and Republican. And I hate to say this, but I'm an advocate of, I think we need a third party, an independent who's representing the center of the country, and not the far, far right and far, far left. So the point is, I just think but I don't ever underestimate the intellect of the mass. The politicians are doing that. The American people are smarter as a group than they understand. And I do think that there's going to be a wake-up call in this nation, and it's going to be for the benefit of all of us. I really do. Now, there are some sparks out there. You're looking at very robust car sales today. The truth of the matter is the average car in the United States is 10.2 years old. So there's a little time to trade up.
Now, there are people who are worried about the subprime auto loans getting out of control.
So, and I am concerned about the quality of the markets. And again, going back to some of these derivative issues that are being created to finance those activities that are very concerning. But again, I think that the political agenda is the biggest barrier of getting out of this malaise that we're in. It's just terrible. And I blame the Republicans as much as I do the Democrats, frankly. I'll give you a quick little story. Tom Ridge thought that Cheney was not going to run for VP the second term. He wanted to be the VP. So he was in my office. He said, Joe, would you support me as VP? I said, sure. But Tom, you're going to walk out of my office, the film crews are downstairs, and they're looking at me and say, okay, Governor, are you pro-life or pro-choice? So he hits my table. I'm pro-life. I said, okay, Governor, could I suggest a better answer? That America start, and the Republican Party in particular, better start looking at. If I'm asked that question, I'm going to say I'm pro-choice. But my choice is pro-life. I'm not going to tell you what yours should be. That's my choice. And that's what's going to happen. Get this moral crap off the political agenda and stick to your principle, and let's get this country fixed. That's all.
Candidate right here.
He'd be the only guy I vote for. At the end of the day, I think that's fun. I think it's fun we put our head down at night to think about that, but I don't think it's practice. We have two old families running, and I think at the end of the day, whether it's Walker, Rubio, even our good friend Christie or Blasio, these are the most
I'm over to eat.
These guys are all valid candidates to be president. Just not in this country. But having said that, I think it comes down to these two. I don't think anything. There is no across the aisle. There is no capability for any of them to reach across. But for example, it is about jobs to me. It's about jobs and education. If we don't get this education thing right, we're going to lose 3 generations. That is inexcusable. But if you think about how much we spent, only because my son got comments the other day, how much do you think we've spent in the last 10 years on these two wars, Iraq, Afghanistan. Take all of what it costs for people, armament, logistics, and then the interest on all of it. I want to go $4.5 trillion. So if you think about that, what could we have done under the banner of protecting our interests in oil? All this noise about we're going to Iraq, I don't know what's Project Freedom, that was going on away. Now we're in the oil surplus position. So there is the money. You know, I had this conversation with dinner. There is the money. We're just, yes.
Yeah.
Almost got it.
You're going to be a little more graphic.
Yes, yes.
But you know, Ron, there's an under-10 problem. And you can't have a great economy, you can't create job opportunities, you can't create a great education system if you don't have safe streets. Right now, in this country, there is a war on cops, there is a war on lawfulness that I think is very, very damning. You know, Dick rounded off a group of potentials for the presidency, and I detected, I may be wrong, but I detected a little snicker when the name de Blasio came out. Now, I can tell you, I would be very supportive of that, because it would be a quick way of getting him out of New York. People forget how bad this city was in the 60s and 70s and early 80s in terms of crime.
Even early 90s for that.
Well,
Yeah.
and you can't expect to have a great public education system. You can't expect to stimulate investment and job creation if the streets aren't safe. And I think that that's not just here in New York. We've seen it in Baltimore, we've seen it in Wisconsin, we've seen it around the country. And I think that it's time, as Joe said earlier, it's not the far left, it's not the far right. This country is centrist. But part of the centrist belief is that you have a safe and clean environment to create jobs, to create good public education. We're going in the wrong direction right now.
So then when you say that, you've worked with Republicans and Democrats alike in the position of the exchange. You hosted Bill Clinton on that last interview. You had George Bush down there and worked very closely with the Bush administration, 9/11 and beyond. When you look out at the field right now, not looking for endorsement or prediction, but I mean, when you look out there, are there two qualified candidates, you don't have to name names, but are there two qualified candidates who are in this race either today, tomorrow, or the next day that could do some of what you're describing?
Well, I think Dick nailed it. I think it's going to boil down to a repeat of an earlier contest in this country. And you have to remember, if it's Clinton Bush, whichever one wins, the success of that presidency will largely be determined by the team around the president. You know, one of the great things about Ronald Reagan was he had a great team around him. One of the great things about Michael Bloomberg, he had a great team around him. And he picked smart people, competent people, who went out and did the right things on behalf of the country. In Michael's case, on behalf of the city. So, is there a dark horse right now? No, and the Democrats say it could be Martin O'Malley, it could be Elizabeth Warren, it could be Bernie Sanders. I mean, we're in that money season. We're still far enough away from the first primary that you hear lots of names on the Republican side. You obviously hear some of the very, very conservative names, like Ted Cruz and others, Rand Paul, and you know the names, Scott Walker. But in reality, I think it's going to be Bush versus Clinton, and the success, their success, whoever gets elected, is going to be determined by the quality of that team. You need a great attorney general. You need an attorney general that's not politically driven, an attorney general that respects the Constitution and says, these are the laws of the nation, and I'm here as a chief law enforcement officer, not to do things that are politically correct, but that are constitutionally correct. We need a great Secretary of Education who understands that education is not a national issue, it's a local issue. And local educators need to be the architects of what is right for New York, may not be right for South Central Los Angeles. Very few people realize that the second largest or the second greatest per capita expenditure in public education in this country is the city of Baltimore. Certainly wouldn't know that by what's happened in recent days, right? New York City doesn't have too small a budget for public education. It's got too narrow a funding at the classroom level. When you take away all the bureaucrats and you take away all of the nonsense between City Hall's funding check and the classroom, a lot of money. It gets wasted. And I'm sure that's not unique. It's around the country. I think, Ron, 16 is going to be a defining moment for the country because Joe and Dick have each said it in different ways. What brings down great, if you will, empire, not wars, but economics. What brought the Soviet Union down? Their absolute belief that Ronald Reagan was going to get that Star Wars shield that he would put above the sky of this country and then press the button and obliterate the USSR. You know, they spent themselves in economic oblivion. What brought down lots of other empires in history, economics. We are not immune to that. Joe said it, $17 trillion. Now, more debt added in this period of this presidency than the period of old presidencies that preceded it. And we can't continue doing that. I think whether it's Hillary Clinton or Jeb Bush, whomever gets elected, they better have the right people, they better understand that the American public, the right to the left, are really centrists. They want their kids and grandkids to not suffer what clearly is going to be the first time in history that we hand to a generation of new leaders a lesser country than the one we inherited from our predecessors.
Let me ask about that, though. Is that the feeling of every generation in some way or another? I mean, you go back to ancient Greece and draw quotes from Socrates that, imply one, that the younger generation is not as good as the past, or they won't do as well as we did, or there is a certain generational pessimism that creeps in, as we enter our stage and the next round comes in. And certainly our parents may have had the very same fears.
First of all, I think that if you go back in history, you look at every empire, Roman Empire, British Empire, he's right to the extent that economics have a lot to do with it, but also the issue is entitlements. When you lose a work ethic, and I went to school, there was one car in the parking lot. I got to be a kindergarten teacher, get a parking spot. So the point is, every generation, succeeding generation tries to do more and more for their children than we got. And you get to a point where you question work ethic. And I think that's a big problem in our country right now. We can sit home and collect 250. Why go work for 300? That's part of the problem. You've got to put that work ethic back in. And try to pick the word that's brought these empires down in addition to economics is arrogance. And when you get arrogant, you stop losing your values. And that's, I think, what's happened here a little bit in terms of over-affluence. We have a big divide in this country. This wealth gap that you read about is real. And the reason why it's real is when you have zero interest rates, anyone with long assets, the value goes up exponentially because the present value gets increased because of a low interest rate. So the rich got richer. You own equities, you own commercial real estate, you did very, very well. Middle class stood still and the poor got poorer. Now that is a dynamic that you cannot ignore. Whoever this next administration is, because this one is no way to fix it. This Congress is not going to fix it. So I am hopeful that the American public say enough is enough. And don't underestimate them in my mind. Let's put some leaders in government that are going to deal with these issues. These aren't problems that are solvable. They truly are solvable. It just takes commitment to do what's right as a nation. And again, The far, far right and far, far left, unfortunately, are the people who vote in the primaries. We get stuck with their choices. So if there's anything we ought to be doing as a nation is convincing all Americans to get involved with the primaries so we can pick the candidates that can lead us out of this morass.
And therefore, I'll start by the industry from which I came, which is that, we focus unduly on the Iowa caucuses and the New Hampshire primary. Two of the smallest states in the country that dictate the narrative for an extended period of time. And we spend a lot of money between them and the election. And it's a story that unfortunately probably doesn't need to be told.
What's your other question? What about previous generations? I think actually in previous generations, our parents, their parents, parents before them, grandfather, I think each of them had a solid view as to how to leave a better platform for their children. I think for the most part, given some hiccups and slips along the way. I think they did. And look, I'm a hardcore capitalist, no question about it. Social liberal, but different issue. Capitalism only really works. It starts with them that got it and gets down to them that don't. As Joe said, this gap has just gotten wider. The belly of America has gotten disenfranchised, whether it's about education. And again, I hate to continue to harp on this. It is about jobs. They can't continue to support their families. Their wages at best have been flat over the last number of years. Regardless of all the craziness, there still is this inflation on consumer goods. Obviously, oil is saving them. For example, this payroll tax. I think it stops at 20.
A little more than that, around 30.
I don't know what the game is on that, but if you go back to the envelope, probably worth it. So maybe what we do is we take that money, gear it strictly for infrastructure. It's got to be spent anyway. And out of that will come a whole series of jobs and ancillary complementary jobs to that. The only way we're going to feel better is if only way people are going to feel better is if they have a job, if they have some pride. So, all this other stuff is fun, but if we don't restore that pride, the next generation will get crushed. Because there will be the debt. At some point, we are going to have to increase rates. Somebody is going to have to pay for it.
I have to add one thing. Our grandparents and our parents, most of them were immigrants or first generation. I truly believe that we are the product of their American dream. They came here and worked 70, 80 hours a week. How they bought the house, I don't know. But we were the product of that generation. We were their American dream. You have to reinstitute the American dream. As I said to you earlier, a good part of that manifests in the house. We've got to fix that problem and get that back. So it's also an issue of aspiration. You have to have aspiration in this nation, combined with capitalism. The two go neck and neck. And by the way, let's not lose sight of the fact that we have substituted capital for labor. We've taken people out of the workforce, a teller losing out to an ATM, a person who used to monitor pipelines, replaced with a computer chip. Those jobs that didn't require too much training are gone. We have to reinstitute training for that middle class so they can compete in the 21st century, whether it be social media, whether it be technology, because the medium jobs are not there anymore. That's just pragmatics. So we have to fix that problem, close that gap. But I would suggest that the difference between our generation and the one today is that there isn't that product of the American dream driving the work ethic and the aspiration that's required to get everybody to engage. I think that's what we need as a nation.
Let me ask a question. Some things about the new technology. I don't know whether it's 10 years or 15 years. But something like 45% of the American workforce is going to be replaced by robots. That's right.
But somebody's got to make robots.
Well,
You know,
Unfortunately, that's
Not to go around artificial intelligence, but the robots will make the robots. Where the machines will make the robots.
the Terminator.
The same way they make cars. No, if you can make a car, you can make a robot.
Comes back to education. Okay, the education system has got to be reformatted to reflect what the economy is evolving to become. And you can't expect to train people for jobs that no longer exist. Now, and I heard a wonderful talk today from one of the hedge fund guys who was talking about education and what the skills requisite are for a kid who wants to be the next Bill Gates, Mark Zuckerberg. And you don't have to be a deeply scientific engineer to write code, okay? You've got to be trained basically in the vocabulary and the vision of how you write code. So,
But they already know that. It's not teaching. I have a 13-year-old son who write code to sleep. Because they already, this stuff's intuitive to them, the same way changing 3 channels or fixing the, radiators was intuitive to us. They know that. They need to be directed how to use the technology and the skills that they have, as opposed to learning the basics. They're picking that up intuitively as their age.
but that's a retooling, if you will, of education in this country. And coming back to something I said earlier, a quality educational system starting at the very unions decided that it's more important to protect bad teachers than to teach good kids. And I'm a union guy. I grew up in a union family. I was a union member when I started at the stock exchange. I'm a great believer in unions. But at some point, it's a diminishing return. You have to ask the question, has the union produced a car with 3 wheels? And if so, who's going to buy it?
We've got very, very hard. I want to go back to the place where you guys lived for many, many years. And Dick Grasso, sorry, we're going to take questions from the audience and we'll finish with this part. Market structure. When you were at the New York Stock Exchange, you had 80% market share or better in the stocks that were listed there. Since then, we've now got 15 or 16 different exchanges. We have dark pools, we have high-frequency traders, we have a recent arrest for someone who was presumably involved in the flash crash exactly 4 years ago. Is there a danger that the wheels have come off the market wagon to an extent that the structure is unstable now, given the way it's set up?
I wouldn't call it unstable, Ron. I would call it non-consumer friendly. The whole premise of the structure of the market, at least as I knew it, as we ran the New York Stock Exchange, was that the public customer came first. And most important was always, and I would say that my partners, whether they were on the regulatory side or on the technology side, whatever you're about to do, ask yourself a simple question. Is the least sophisticated user of the market, the person most unlikely to ever understand what you're about to do, is that person going to be protected? If you take good care of that consumer who knows nothing about the structure of the market, but can basically trust the integrity that the market is going to always do what's right for that person, everyone else benefits. And by the way, that market share, that centrality of market share, created, if you will, the good housekeeping seal of approval. I didn't ever say that every share in IBM should trade on the New York Stock Exchange. I might believe that, okay, but I never said it. What I said was, if a customer can get a better price somewhere else, that's where that order belongs. That's not happening today. Today in IBM, it trades in 60 different venues. No one knows what the last sale in IBM is. No one knows what the last sale in the actively traded stock is. And that's bad for the customer. That's why, look at the bounce that we've had since March of 09. March of 09, the S&P was at 666. Today, it's 2,100. The public was scared to death out of the market. The public has a tradition of selling, if you will, at the bottom and buying at the top. The flash crash in May of 10 reiterated that. What's happened? It missed one of the great rallies in history, right? And that's the SEC is at the center of this. And I'm really encouraged that we've got a very, very good SEC chair in Mary Jo White. I think she understands the problem. I think she's going to address it. She's had lots of other things on the front burner, but I think they're going to get to it now. And what they're basically, I hope, going to conclude is the more markets, the merrier, as long as everyone is guaranteed the best price. And everyone knows what the last price was. That's the only way you can benchmark that you protect these consumers.
Dick, do we need more human intervention in the market, or can the machines run the shop fine?
I unfortunately believe it's clearly that because there's so much new technology that's being created every day. Somewhere there's going to be a disconnect. Part of your question is, could it happen again? For example, you have all these new algorithms around compliance and the rest. How do you test these new algorithms? You can't turn off your system. You got to run it parallel. And you believe you have it right. You saw that with night securities. That's all with night securities. They tested it, they thought they had it right, they implemented it, they lost $450 million for about half an hour. I was going to say an hour and a half, but fine. So that's hardly cut it in half. So at the end of the day, whatever's being created today is 10 times or 100 times what was created 3 or 4 years ago. So, unfortunately, one of the things that's happened, although it is about people, it is about this whole thing about regulation, and the regulators, and compliance. I think there's clearly a huge need for it, but you have to have people that understand. They don't even understand some of the question that they're asking. Instead of creating a 2-lane highway, which they can manage, they're creating an 18-lane highway so that they can reach in and say, oh, this is what I meant to say, you violate. So, to me, it's about people that have market experience and knowledge, and then how can they take these rules and regulations and actually apply them so that banks can lend to small and medium-sized businesses. Banks are lending to everybody who doesn't need it. And at the end of the day, the ones that we really do rely on to create new ideas, new systems, new products, they're not getting done.
Joe, did you follow what I structured on the average? First of all, I believe the markets have become too fragmented. The gentleman on the far left here got the New York Stock Exchange to 85%, but the real value was the quality of the market. And Dick Grasso defended the quality of the markets. At the same time he was there, I was chairman of the board of governors in the NYSE, and we collaborated on these issues. Since he's left, the market's gotten so fragmented and institutionalized and been taken over by technology. You don't have the same transparency, you don't have the same price discovery, and the markets, in my opinion, are much more volatile today, and you get something like the frequency algorithm that Thoreau did, and with 19,000 entries in one day, and you wonder who's watching this activity, because that's certainly discernible and should have been stopped before it got to the point it got to. So I think that the regulators have got to step back. It's not about too big to fail. It's about positions that can create systemic risk, whether it comes from one little broker in London or when it comes from an institution. It's more about an order that can create a systemic problem in the marketplace. It's not about science. The banks are better today than they ever been in terms of tier 1 capital and their reserves. But I have to tell you, the quality market, if I had to pick one single event that has really deteriorated the marketplace in the United States and frankly losing our global position is the day that Dick Grasso left the New York Stock Exchange. Questions up in the audience, if you have any, please feel free to recognize you. If you don't mind just standing and yelling out your question.
We bring the lights up a little bit. We have have microphones in each aisle, and
Don't be shy.
don't be shy, especially students. You listen to these young men. Well, they're younger than me, most of them, anyway. So these young men have a wealth of knowledge. So as you're going forward with your life, find out where you're really going to go. So let's stand up and announce your name and as we go. Come on, over there, anybody?
There's a gentleman right there.
Stand up, you have a microphone.
Hi there, good evening. I have a very good question for you. In order to bring more businesses and more jobs to the United States, do you support a flat tax with no tax write-offs? Yes or no? I'm directing Please answer.
The answer is yes. I would support it.
Didn't it?
Why?
I would because it's a level playing field, take out the complexity, everyone knows the rules. It should not be the same tax for everybody. Maybe 3 levels, but a flat tax, get rid of deductions, only the accountants and the attorneys will cry.
I just met this young man on the way in. He's already written 3 books. So maybe we ought to talk to him after the show is.
Can you have a question down here?
Will you bring the microphone down here, please?
My name's Ed Burke. The effect of pensions nationwide. Pensions are crippling some states, other states are not so effective. Could you just talk a little about pensions, and is there a way out of this quandary?
It seems they're less underfunded than they were.
Well,
They're still
I think
underfunded.
one of the great benefits of the last, call it period, '09 through the current, is that a lot of the deficits that sat in public and private pension funds have been cured. However, that is not by no means a permanent solution to the problem. I mean, remember, markets can go in 2 directions. A lot of pension plans have fixed income securities that could suffer a dramatic turn down if interest rates rise precipitously. I think we're in a lot better shape than we were 3 years ago. I mean, if you go back, actually, if you go back to the bottom, which would be March of '09, the pension deficit was probably close to $100 trillion if you took state, local, and private and put them together. I would gather that we've probably cut that by a good 60%. But that's still a lot of width between responsibility to the pensioner and the actual assets that sit behind those obligations. You're talking $40 trillion. Will time cure that? Sure, if we have a normal bandwidth of volatility. But if we go into a very volatile period, whether it's equity markets or debt markets, we could have a real problem on our hands. The second thing that I think that people underestimate is some of the litigation that has cropped up around the country, breaking pension plans. I'm not an advocate of that. I think a promise is a promise. You know, if you have the wrong people negotiating for a city or for a state and they promise cops and firemen something, those cops and firemen should get exactly what they were promised. On the other hand, it should teach the electorate a lesson about sending the wrong people into public office.
And Jeff, one other issue is longevity, which you just
I know that, but it's
so the
so-
last 2 years, life expectancy is about 2
Yeah,
years.
look, whether it's Social Security or pension, when Roosevelt put in Social Security as a safety net, it was the most astute political event in history. Life expectancy was 64 years old. No one was going to live to collect it. Now, if you get to 65, life expectancy is between 80 and 86. So even in pensions, the unions could muscle people and companies and municipalities to create benefits that, frankly, are maybe not so fair. They need to be reset because of longevity. People are living longer, and we have to sit at the table and fix this because they weren't structured for all of us living to 100, which is going to happen before it's over. There'll be a powerful tube somewhere in our body, and we're going to 100. So we have to deal with the given reality. In all my travels in Social Security, people who are 45 and older are all expected to be grandfathered. Under 45, they don't think it's going to be there. So we should draw a line in the sand, Mason-Dixon demographic line. If you're 45 on January 1st, 2016, you're grandfathered. If you're under 45, you have to go to 72 for full benefit. However, you as a group can double your IRA in case you want to retire sooner. Very fair, American public accepted, and that's what you do.
You know, I think it's a big power. Friend Chris Christie a couple weeks ago said we should raise the retirement age right away. When people are working longer, why not just recognize it?
Well, but Chris got a different problem. That's one place where the pensions have really lacked.
Well,
I live in New Jersey and I like Chris Christie, but he's going to have difficulty with
Well, the reality is, and Joe put his finger on it, when Roosevelt enacted the legislation, people were expected to die 1 year before they were actually beginning to collect benefits. Okay? The world has changed. Look, Dick Fuld, Dick Grasso, Joe Grano do not need Social Security. Okay, fine, wipe it away. Except, now there's a little bit on the far right in this country that says, that's unfair. You were promised it, you should get it. Right? I don't happen to agree with that, but create something that is, that would make people feel good. Give them a tax credit. Tell them it's going to charity. Tell them it's going to other than the government charity. Okay? I want to go back to something that Joe once said. The reality of pension expectation in this country post-World War II was an inviolate, if you will, commitment. We've evolved from a defined benefit to a defined contribution society. Joe put his finger on it. Right? Tell that 28-year-old you're no longer in the system, but you can put up to 40% of your income into your retirement plan. Think of it this way. In 1974, in the fourth quarter, the Dow Jones Industrial Average was under 600. Under 600. Can you imagine if you had just put your pension plan into the Dow at that point, how much better off you would be today than you would be collecting Social Security? Go back to 1982. The Dow was under 800. I have to go back to 74. And there are periods, just recently, the Dow in March of 2009 was basically 1/3 of where it is today. Okay? So there are lots of ways you can create, I think, very, very stimulative private sector initiatives to get us out of this problem. But you need, something Joe and Dick both said, very likely or very unlikely to occur. You need people on both sides of the aisle to say, you know what, this is good for America. Forget about whether it's good for Democrats or good for Republicans. It's good for the country, and it should be done.
Your question, though, clearly we cleaned up some of the pension liability. I think that's strictly as Dick said, because the market's weak. But the real question is, what is the yield? What kind of return are they getting? All the pension fund managers pick middle of the road. They never go for the best result. God help us if interest rates do go up, which I think is only a matter of time. Those that try to survive on a fixed income benefit are getting crushed. There is no return. The insurance companies have no spread. They're being forced out the yield curve and the risk curve. 265, 30-year line. How many people are going to get crushed with that? So you go out the risk metric. How many people are going to get crushed with that? How many bubbles are going to be created all over you? I am very concerned about the pension infrastructure. And whatever people have for savings, how they're going to generate a return to live. And how many kids, by the way, are moving back into their parents' and grandparents' home because they can't afford it. Big issue.
One final question, then we'll get final thoughts. Yes, sir, right there.
Hi, my name is Ian Curry. First of all, I would like to compliment you gentlemen because I get a feeling from you in your conversation here that you're worried about America. Not about your jobs and your political party and that sort of thing, but America. And I think that's right because that's the way I feel, and I bet a lot of people here do too. Right. asking one question. You feel that the people you talk to and your peers agree with that, the people at your cocktail parties and things like that, but that's not my real question. It really is. I've seen going on in this country this concept of financial institutions, places that you work, being used as piggy banks for governments, for state governments and for the federal government, pulling $16 billion out of the Bank of America, and et cetera, et cetera. And what I don't see is the Bank of America, or I'm sorry to use that as a name, but all financial institutions standing up and saying, wait a minute, let's discuss this, let's argue this. I don't agree with your decision that I have to pay $16 billion. I mean, it is possible that they do, and if they do, it's because somebody did something fraudulent in the company, and that son of a gun should be taken out and tarred and feathered or whatever. But they don't. They just pay it, and they excuse themselves and walk away. And the chairman is still the chairman, and the CEO is still there, and they're still getting multi-billion-dollar salaries. And what are they doing to correct it? They're letting people go. They're letting the $35,000 a year employee go by the thousands to make up for that hole. So I don't understand it. Perhaps you can help me and give me an answer to that. Thank you.
I'll attempt a couple of things. Number one, 10 years ago, 15 years ago, 20 years ago, what was a $200 million fine for some misstep at a major institution today is a $5 billion fine. The feds have decided to react with much bigger fine. And the problem with that is, first of all, that money comes out of the shareholders' pocket. If you hit Bank of America, with your example, for $16 billion, you're just taking that money right out of the shareholders' pocket. Who are you punishing? And everyone who owns that stock, and every pension fund that we've talked about, that stock's going down because of that regulatory action. A bigger point that I have for that, by the way, is that what's going on from a foreign policy issue. If the feds whack Paribas for $9 billion, which they did, or whack BP for $16 billion and go back for another 18, the EU is not going to sit back and not create some reciprocity. So no GE, you cannot buy Honeywell. Google, we're going to come after you for monopolistic activities. That's what's happening here. And the Fed's got to step back and realize that they shouldn't be taking such aggressive actions on these fines. They're hurting the wrong people, is the real point here. And the reason why they don't step up is because the Fed added another arrow to the quiver. If you don't accept the fine, we're going to come after you with a felony. And now you're going to be found guilty and your goodwill of your institution goes with you. So they know how to play the game now. They're putting the gun right to your head. And it's not right. And the next president hopefully is going to tone it down.
It's actually a bit worse than that, in the sense that if you don't agree, if you're the chairman of a bank and you say, you know what, you did nothing wrong, we'll litigate. The mere fact that the government brings a criminal action against a financial institution means in most cases that that institution's institutional customers can no longer do business with that bank. So long before you get to an adjudication of that litigation, you're going to lose your customer base. So what most CEOs and boards will say is, we can't afford to have that happen. These fines, as Joe said, come out of shareholder pockets. Now, I wouldn't be as concerned if the fines went back to the people who were injured by whatever the conduct. But you notice very carefully, we've never read a story about where those funds are going. These massive fines that have been paid to the government seem to just kind of mystify into the air. That's wrong. And it's wrong to be able to cow, if you will, the regulator, whether it's the Fed, the Treasury, the Comptroller, the currency, or the SEC, to simply say, you either agree to this, or we'll bring a criminal action, and you'll be out of business long before you're adjudged to be innocent. I
of these fines also are to appease the belly of America. And so they're talking to their constituents, trying to say, look at the big fine I got out of the big bad ones. Anybody wearing a jacket and tie that's a bad guy. Represents a business, represents capitalistic view. So by definition, they can get a big fine out of the institutions, then their constituents will say, good job. Or if you're a regulator, you've done a good job, you get moved into a place where you get another job with a big firm. So it's not a line for, to say, Joseph, who gets hurt? Time again. Is a little bit. He gets crushed. Under the guise of, I'm trying to do the right thing. That's a bunch of
So, I think I'm going to address it when I come down the line, just a final thoughts. I mean, Joe, I know you have some, but if we were to reconvene a year from now, what do you think we could talk about?
I think, a year from now, Ron, there'll be clarity as to who the candidates are going to be in this contest. I think that we'll have some sense as a country of stability in economic rebound. I happen to think, Joe and Dick may disagree with me, but I think the second half of this year is going to look a lot better than the first half. And I think both sides of the aisle are going to be grasping for some form of public policy initiatives that they can say, our party did it, ergo elect, whether it's Mrs. Clinton or Jeb Bush or whomever either side puts up. And I have to be, I have to tell you, I've seen it in the darkest of times. I've seen it when the Dow went from 1070 to 574, between 73 and 74, and I've seen it climb, as many of you have, the levels that it's at today. One thing I would say, in sum, you bet against this country, you bet against the market, time will prove you to be wrong.
I think in a year, I think that would be perfect storm of weather. We hopefully will get a candidate. Interest rates, I think, will be 25 basis points higher. I think the income gap gets wider. I don't think the unemployment number for real changes. I don't think we address a whole number of the fundamental things that we're talking about here. I think, unfortunately, Greece will have defaulted, and then somewhere in there, the relative strength of the euro will come into question. I think China is weaker. So when China said it was 12, they were really at 15. Now that they say 7, I think it's actually closer to 5. And going south. They have 3 groups of 400 million people. They've already disenfranchised 2. I think they have huge social problems. My fear is that the stuff that we saw around Baltimore, be more. And I am actually afraid. Because we don't have the mechanisms in place to give it. And it goes back to the same thing. I don't think we have the mechanism to give them a hope. So I hope that this year we're able to rebuild. I actually don't see it. And I am. I don't see the pieces. I don't even know if the things that we're rooting for are the right things. There's no one to root for. They don't this time. Because I don't see the mechanism that's going to activate those things to get us out.
Before you speak, can I raise a vote?
Sorry?
Joe, before you speak, I want to raise a vote. I'm ready to go.
I want to answer the question differently. I would like you.
Oh, Joe, just be quiet. Now I'll take a page out of history. Out of craziness, dysfunctionality comes huge opportunity. I actually really do believe, straight out of the some of the stuff I do believe the good guys win. I do believe that. Having said that, we have the single best system on the planet. A ton of money is flowing into it. The question is, do we have the capability to do something with it? We don't help our people. By the way, that's what government's for. Not this other ridiculousness. Are you really getting to the current point?
I remember another time.
I would like to answer the question by saying, people in this room will have more to say what we look like a year from now, if you insist, if we are at a crossroads as a nation. You have to insist on the people who you are asking to lead this nation to A, one, act like one America. Because the country's getting so divided here, worse than the Civil War as far as I'm concerned. We need leaders that treat Americans as one. Number two, we need leaders based on the problems that we've discussed with you, who are client-centric and solution-based. Who's the client? You are. And you've got to insist upon that going forward. And last but not least, for those of you who are educators in the room, I would suggest with this job gap that we have, go to people in positions like we were in and say, what do you need? What skill sets do you need from our students? Because if you're a professor and you are asked the question, how do you define, what metric suggests you're successful? Well, if it isn't that young person getting a job when you leave the tower walls, then you fail. And you have got to collaborate with the corporate sector as to what skills are we looking for. I sit on the community board, I'm never asked. And that's a shame. And we've got to start collaborating together because they are your client and my client as well as a corporate president or CEO. And I'm very, very optimistic about the youth of this nation, but we've got to get them to work. You got to help us get that done as well. So those are the three things. You dictate the year from now for us. Again, I never underestimate the prowess of the mass. If you insist on those three things, America is going to get through this just fine. And that's what I would ask.
Dick Grasso, Dick Fuld, Joe Grano, thank you very much.
So much. We have a commemorative gift for you, which is a beautiful tray for each one of you, which says Wagner College in appreciation for your participation in the Presidential Economic Summit Symposium Series, and has each of your names and the date. Each one of you. Thank you so much, and thank you, audience.